Hi, everybody. My name's Grant, and I'm going to tell you about LeapMotiv and how we can help you build a new venture. LeapMotiv started quite a few years ago, and our mission was to help entrepreneurs like you realize their dreams, specifically how to start a company. You may be waiting for the right moment or being stuck on a particular problem. This is where we come in. Our goal is to help you. There's three branches of LeapMotiv. Number one is education. We have developed what we're calling the Pragmatic Venture Blueprint to help you unstuck yourself when it comes to starting a new venture. We are building a community, which is the second pillar, where we look to connect entrepreneurs, domain experts, as well as technical talents. And then the final piece is advisory. And so we have a network of people who have done this before, ex-entrepreneurs, current operators, and they are more than willing to help you be successful within your business through the concepts of an advisory. So if this is your first time building a company, it's important to understand some of the milestones that you need to hit in order to grow and become very large and successful. On the bottom are those milestones. You have idea, proof of concept, minimal commercial viable product, paid pilot, getting early traction with customers, and then really scaling that traction through commercialization. And so when you think about those steps, there's different risks associated with that. And when you systematically overcome those risks, your valuation goes up. Most of the risks, although there's lots of different types of risks, one of the main areas of risks is this concept of demand risk. And so do people actually need the product that you are selling, and are they actually capable of purchasing? It's really important that you validate that early as possible so that you're not wasting any time, because if you're building something that nobody wants, that's not going to help anybody. And so a lot of what we're going to go over through the framework that we've developed is explaining how to ensure that there is relevant demand for a particular product or solution that you've got expertise in building. There's lots of really interesting information online about reasons why startups fail. And the thing that I've experienced and have consistently been told is it's all about timing. And so specifically what that means is regardless of the solution, the market, your customer base, has to be ready to take on a solution. And if it's not ready, it'll ultimately fail. You may have some early adopters, but in order to hit critical mass, the timing has to be right. And so when we distill down timing, what does that actually mean? And from our perspective, again, based on our experience, timing really relates to the why now question. And so people generally don't change as a concept unless they're forced to change. So people are reluctant to change. And so if you're building enterprise software, they're not going to purchase something new unless there's really compelling implications to force them to change. And so in our head, when we talk about timing, it's really ensuring that something has changed external to the customer. And if the customer doesn't adapt how they're working to that change, there will be significant implications. This is the area we're going to probe. And if you find that, then the timing will be right. And if you don't find that, no one will be willing to buy your product because they're not willing to change, because there's no reason to change, and therefore you'll miss the timing. So a lot of what we'll cover in our framework really addresses how to validate that this is in fact the right timing. And so one of our other partners, Ruben, came up with this concept of mind the gap, and it's a good encapsulation of what I just talked about. Is if you've got an idea and you share your idea with a group of people, more times than not, they'll say, "Oh, I love it." But does that actually mean that you should go ahead and build that product? The answer is definitely no. What you need to figure out, in addition to them giving you feedback on your actual idea, is getting them to pay you money. And so if they put dollars behind that "I love the idea" comment, then you know you're onto something. If they're unwilling to put dollars or unable to put dollars, then you don't have a product. And so you need to figure out why that's the case and probably change things up. And so again, a lot of what we're focusing on is moving away from just getting high-level feedback to figuring out how you get prospective customers to buy what you are selling before you've actually built it, so that you can prove that, hey, this is something that's worth investing because we know there's a market. If you can't do that, then you probably don't want to invest too much time or energy. And so we talk about this in the concepts of demand side risk, which is the market willing to actually purchase the thing that you're selling because there's real problems that it's having. And then the supply side, which is the product. So can you actually technically build this thing to supply what the demand is for? And so we'll go into that in a bit more detail. So yeah, I referenced briefly this blueprint that we've spoken about. And this came about after, our group of entrepreneurs who we all worked closely together, stepped away from a venture and realized that in order to build a venture, it's really quite a unique skill set. Because especially as a founder or solo founder or a founding team, you really have to do a bunch of stuff. You have to do product research, you have to do market research, you have to do demand generation, you have to do sales, you have to do product management, you have to do product development, you have to do client success. It's a whole bunch of stuff. And if you're not sort of focused on where you should spend your time now versus potentials in the future, you could end up wasting a bunch of time. And so this blueprint is really is really meant to help you navigate the steps that you should be focusing on and the priorities that you should be focusing on relative to where your startup is in its journey. And so there's four primary buckets, and those buckets map back directly to this slide. Idea, proof of concept, minimal commercial viable product, paid pilot, early traction. So this maps pretty closely to that. And so the four buckets are as follows. Ideation. And so if you want to start a business, you may have an idea, but it's unlikely that that idea is going to be the right idea. It'll likely be some variant of that. If you don't have an idea, don't worry, there's a way to get ideas. And so within the ideation bucket, our goal is to develop a process where you can consistently come up with 2 to 3, whatever the number is, qualified opportunities for new products at a specific time cadence. So that could be every couple months or every month. And so we have developed a process to help you do that. And there's three paths. Number one is the generation of ideas. And so we help you do this by sort of putting down a blueprint on how you can approach that. And it's all about looking at a particular industry, looking at a particular domain, and trying to understand the inner workings of that and where some of the challenges are. Once you get really good at that, you'll start to be able to generate opportunities. The next step will be to evaluate those opportunities. Again, you don't want to waste time on things that'll never work. And so how do you quickly assess an idea that you've got in terms of whether or not it should move to the next phase and you should spend some real cycles on it? You don't want to waste time. So anything that can't really be tested, isn't really viable, you want to just get off the list right away. That's a win. You want to focus on the things that have the potential. That's also a win. And then the last piece of the ideation is how do you write something down in a really easy way that's really easy to test? What are the components of that hypothesis that you should craft so that you can go to market yourself or with colleagues or teammates and come back with a validated hypothesis on whether or not you should proceed. And so that's the idea with ideation. Or if you do it right, the output of that would be a qualified testable hypothesis. The next phase is demand validation. And so demand validation, again, going back to mind the gap, is ensuring that the timing is right and people actually want to buy your product. And so here, you're going to actually reach out to practitioners, your prospective customers, and try to get a sense of what problems they have. If this problem you're working on is worthwhile, what do they think about it? Would they purchase it? How would they purchase it? Who would it be involved? What do they think of your idea for a solution? If you built the solution, would they buy it? And if they say yes, can you actually convert them to give you money for a product that does not exist, that is still conceptual? And so if you do this phase correctly, you should come out of it with a list of pilot customers, one or more, that will be paying you money with commercial terms. You will have gone through procurement, et cetera. And so if you can get to this stage, you're doing fantastic, and we help you do that. And then this takes you to the next level, which is, okay, we've got a customer, or maybe two, maybe three. How do we know this is actually a business? And so that's the next part of the business validation. And so this section really focuses on, do we have the right business to actually start to scale it, because you don't want to scale something prematurely that never works, because again, you'll just waste time and money. And so the different aspects that we're looking at is, number one, can you generate interest in your product as it's defined for your first pilot customers? And so can you get net new business opportunities into your sales pipeline? Two, can you convert that? Three, are you able to onboard them successfully so they get value out of your product? And the final one is, can you actually deliver value through your product so that they want to renew? If someone pays for your product, tries it, doesn't renew, doesn't like it, and they churn off of it, that's a real problem, because you can't build a business that way. And so everything in this stage is ensuring that you know how, you've set the framework on how you're going to get leads, convert those leads to customers, onboard those customers, and then retain them through the product, as well as some of the byproducts of that, which is refining your customer profiles, understanding the messaging, tweaking the pricing, and how the commercial terms will actually work. So once you've got that in place, you can move to the next stage, which is growth validation. And so what we've got in business validation is a really good straw man of how this company should grow. You've got some good evidence on traction. You've got some good evidence on value. And so now we want to start ramping it up to increase the number of customers that we're going to attack. And so here it's all around, how do we renew the customers that we have? How do we recruit leaders, specifically in the go-to-market functions, to scale this successfully without wasting too much money? And what are some of the unit economics and metrics that are going to be really, really important to test the health of the business? And so this framework is meant to explore based on where you are in your journey. You can click in on any of the boxes and it'll tell you more detail. It'll give you the playbook to how to do it. There's a million ways to do it. This is really one perspective that we have based on our cumulative experiences. And so a lot of the advisory that we do is really mapping to where you are on this framework, and then helping you through the next steps. And so, yeah, let me give you a quick case study on Flashstock. So Flashstock was a company that I founded back in 2013. And we basically were trying to help large enterprise customers create content for their digital marketing efforts. And so the idea was that rather than paying a creative agency or a production house to create content for you, which was quite costly, quite time intensive, we could crowdsource. So we could tap into a network of photographers and videographers from all around the world, and then get them to create the content on your behalf as a customer, and it would be on brand, on brief, and you would get that content for a fraction of the cost, much, much faster. And so the reason why we were so successful, one of the reasons why we were so successful, and we grew very quickly and ended up having were acquired 4 or 5 years after founding, was the why now for us was really clear. The why now at the time of founding the company was social media. And so for the first time ever, these large consumer facing brands had to have a social media presence. And so if you've spent any time in this space, you know that the content that you put on social media is different than you would put on, say, a TV commercial or your website or print magazine. A lot of the customers had never done that before and were really, really struggling because they didn't have any budget, incremental budget, to create all these other new pieces of content for these platforms and make it native. And so one of the things that we did right out of the gate is position our offering to that, and not necessarily just about content or stock content, as an example. And so we positioned as brands need to tell their story visually, and we enable them to do that. Our first customer was Anheuser-Busch, and we did negotiate an upfront contract without any product for $65K. This came out of, and once you spend some time in the framework, you'll start to see some of the patterns here. This came through some previous work that I had in another position, where I built relationships within CPG brands, and ABI, Anheuser-Busch, was one of them. And so that was really the catalyst for our growth. And so we spent a bunch of time building out the demand side of the business before we built out anything else. And we started to acquire customers relatively quickly on a singular value proposition, and then we backfilled the team accordingly. We finally positioned mostly on consumer packaged goods. After building the customer base, we saw that this segment of all the different segments was the one that closed quickest, highest deal size, and retained the longest. And then in addition, we built a partnership ecosystem with some of the platforms that they would use, our customers would use, which led to a lot of incremental deal flow. And just as we were ramping up, we got an offer to sell to Shutterstock, which we did in 2017 for 65 million, having raised very little funding. And so it was a very quick success for the team, and it was an amazing experience. And it was one that sort of really helped us appreciate the craft of building a new venture. And so we've put a lot of the learnings, and I've put a lot of the learnings into what we did for Flashstock into this new pragmatic framework. So that's a quick overview how we can help. We are regularly putting out webinars. Check out our website, leapmotiv.com. And in our webinars, we pick themes and we dive into those themes. We have case studies, we bring in guests. We're also building a community. So if you're interested, you can click the link and join our Discord here. It's filled with founders, tech folk, ex-operators, you name it. So if you come there, you can ask specific questions, network, look for co-founders, look for technical support as well. And then the final piece, if you are struggling with an idea or a venture that you've started, we can help. So just feel free to reach out and we can dig into some of your challenges specifically and share some of our learnings.